And welcome to another episode of Experts Speak. I am Michael DeLon. Today I'm talking with Geoff Suval. Geoff,
Yes,
how are
indeed.
you, sir?
I'm doing great, Michael. How are you?
I am unbelievable. It is a great day, and it's just fun to have you here. Because, Geoff, I mean, you do something that I honestly don't know. I've been doing podcasts. This is over 400 episodes, so we've been doing it a long time. I don't know that I've ever talked with somebody who does what you do, which is really, really cool. So, Geoff, we're going to talk about how to fix your cash flow and your liquidity problems in business because Geoff understands business capital and credit and financing that's not tied to you personally. Okay, this is intriguing. So before we get into that whole discussion, tell me, Geoff, I mean, how in the world did you get doing what you're doing today?
Well, thank you again for having me, Michael, and thank you for that question. It's a great story based on my personal experience. I spent nearly 30 years in traditional financial services, financial advisory work, financial planning, but ultimately the last 15, I was very focused on retirement plan advisory work for medium to large enterprises. I had my own practice, and I was fortunate enough to win some pretty significant engagements with big companies. And so to do that work, I needed to hire some outside consultants. And if you know the space, you might know that when you're doing retirement advisory work, you get paid at the end of the quarter after the assets are valued, et cetera, et cetera. But I needed to pay my outside consultants now.
Yeah,
So I needed access to money. So I opened a business line of credit
there you go.
and I used it to pay my outside consultants. And then I would pay it down once I got paid. And every quarter, rinse and repeat. I would tap that line of credit, pay my outside consultants, and pay it down. But every time I would tap that business line of credit, I noticed my personal FICO score was taking a pretty significant hit. And I was like, I don't understand this. This is supposed to be a business line of credit. Why is it impacting me personally? I mean, I had a separate company, I had an LLC. Why is this impacting me personally? I didn't know how it worked.
Mm,
So, fast forward a number of years later, I got out of the retirement space entirely. The firm that I was with at the very end was acquired by a very large, uh, you know, global entity. And
yeah.
that allowed me to pivot. And I started doing business development for another very cool company that is essentially a one-stop shop for small and medium-sized businesses. And one day I was just looking for another arrow to add to their already diversified quiver, and I stumbled upon a company that claimed to build business credit and get you access to the money you need when you need it, better rates, better terms without having to personally guarantee everything. So less
Okay.
personal financial risk. And I was like, wait a minute, I could have used this.
That's right.
And so I was more than a little bit intrigued. And then when I looked into it a little bit more, I became more and more fascinated. And then I saw that that company was hiring. So I submitted my resume. I got through the interview gauntlet and was adopted into the family. And that's how I got into the business and did very, very well there. And a couple of years later, started my own practice, Accelerant Business Funding Solutions, in the same exact space. We just do it better, I think.
I
And here
like
I
it.
am.
I like it. How fun. So you've been in this whole money world for a very, very long time, which is good. And but it's intriguing because I mean, I think most business owners have a business line of credit, but they probably don't understand how it works, and they most of them don't look at their FICO score and all of that. So unpack what is the difference here that you're bringing to the table for business owners, entrepreneurs to be able to find business lines of credit that aren't tied to them. But unpack that a little bit.
Yeah, well, it's an entire process, Michael. It's not something that just happens. Even when you know what to do, it still doesn't just happen, automatically. It's a very intentional process that allows you to effectively build your business's business credit profile and score so that you then do get access to what you need at better rates and better terms without always having to sign on that dotted personal guarantee line. But
Yeah.
it relates to there's really four different things that go into making a business bankable is the term that we use, and therefore fundable, and attractive in the eyes of the business finance world so that they look at you as a good risk, because
Yeah.
no lender or investors wants to extend credit or make a loan or give you money
Right.
if they think it's going to be a loss to them.
Yeah.
And so you need to know what to do. And there's really four legs to the bankable table.
Okay.
And that first leg is really completing all the items of lender compliance. And there's about 20 or so items of lender compliance, which is essentially how you show up like almost immediately to
Okay.
lenders. And it's something that can be checked like instantaneously by like a lender's computer,
Okay.
and they can scan to see what you look like and how you show up. And if you don't check the right boxes, you're not even going to talk to a person. The
Right.
computer's going to say, right? So you got to make sure that we've checked all those items of lender compliance so that they know that your loan, if they do extend a loan to you, will conform and they'll be able to sell it on the secondary market. Because lenders, they don't hold on to that paper. They actually sell it on the secondary market, right?
Yeah.
People don't necessarily understand that. And so checking the items of lender compliance and making yourself look attractive is the first leg. And then you get into the second leg, which is essentially acquiring business credit trade lines and having comparable credit. Now, business credit trade lines that report to the business credit bureaus, which are different than the personal credit bureaus. People are like, oh
Okay.
yeah, I know TransUnion and Experian and Equifax. No.
Yeah.
Business credit bureaus are Dun & Bradstreet, Experian Business, and Equifax Business. There's a smaller one called Credit Safe, and they're coming up, but still really the first three are more important. But you have to have trade lines that report to those business credit bureaus and not just report when you're late. They
Yeah.
need to report your good behavior.
Amen. Amen.
When you pay on time, that's how your business credit score gets higher,
Up.
right?
Yeah.
And you have to have comparable credit. They want to know, well, has this company ever had access to that amount of money before? And if so, how did they pay on it, right?
Right.
So comparable credit and reporting trade lines. And then having your scores. Leg three is having scores that are attractive. And generally, your business credit score on a scale of what is usually about 0 to 100, you need to be 70, 75 or above
Okay.
to be considered good and responsible, right? And a good risk. And that's more based on your timing of your payments, right? You pay
Okay.
early, your score goes up. You pay late, it hurts you, right? And then there's something called a FICO Small Business Scoring Service, SBSS score. This has become more and more important. Your FICO SBSS is probably as important these days as just your regular FICO is in the personal credit world, right?
Really?
Yeah, and the FICO SBSS is challenging because every bank, they use the same criteria that goes
Okay.
into your FICO SBSS, but they can weight those criteria differently based on their own appetite. So, for instance, Wells Fargo might say, well, the personal credit of the 20% or more owners of the business is worth 40% of our score. Whereas Bank of America might say, well, that's only worth 10% of our score. We're more concerned with the industry or debt to income ratio or any of the other factors. So each bank has the ability to weight their own FICO SBSS score based on their own appetite and tolerance for risk. So your FICO SBSS will be different at Wells Fargo than it is at Bank of America than it is at PNC, right? So it's kind of it's a challenging thing. You need to know what the banks look
Yeah.
for. Thankfully,
Yeah.
we do know. And then the last thing is your bank rating. The fourth leg of the bankable table is having a bank rating of at least a low 5, which is generally a minimum bank balance, your general ledger account of $10,000. Anything less than that, they're like, how are they going to service this debt?
Right.
And they can check that. There's something called the small business scoring, or it's called the Small Business Financial Exchange, that actually can look into our business bank accounts and see how much money has stuck to us. They can't see what we spend it on,
That's
but
right.
they can see how much is stuck to us. Therefore, what's our ability to service debt?
That's crazy, man. There is no hiding anywhere, is there?
No. So there's a lot that goes into becoming
Yeah.
bankable and therefore fundable.
Yeah.
Um,
Well, and let's talk about that because I think some business owners, I mean, a lot of business owners are like me, dude. They got into this on accident. And I've not been to college about how to run a business. And so uh, talk to business owners as they're growing the importance. And you had a great example earlier, personally, about the value of having this line of credit, this financing available to you. But number one, to grow your business. But number two, to keep it aside from your personal thing. Why is that important? Unpack those two.
So, so important. So look, the numbers are the numbers. Per SBA numbers, nearly 9 out of 10 small businesses will fail. I mean, over like a 10-year period. And a little bit over 80% of the cases, the reasons for the failure is lack of access to capital or poor cash flow management.
Yeah.
And so it's a problem, right? And so being able to fix that by looking attractive in the eyes of the lending world so that you'll get access to a corporate line of credit, right? There's business credit and there's corporate credit, right? Real business credit is corporate credit. That's not attached to you. It's attached to your EIN.
Yeah.
That's what you need to build to truly reduce the risk. And once you have that corporate credit and you can actually move the risk from you personally, your own personal balance sheet onto your EIN, when you've gotten that separation, that's where the amount that you'll have access to is larger. Business numbers are just larger than personal numbers. And if something does go sideways or south for your business, as does happen, sometimes through no fault of the owners. I mean, think about the mortgage crisis, think about, COVID, think about what's going on right now with, economic policy and tariffs and everything. Businesses are feeling it, right? And sometimes through no fault of their own, it's just the environment. And so if things do go sideways and you've personally guaranteed things to get access to the funding or the financing or the leases that your offices operate out of, if you're personally on the hook for those things because you've signed a personal guarantee, you can lose your house.
Absolutely.
You can lose your savings. I mean, everything's tied to you. And we see it, when businesses fail, that leads to a lot of bankruptcies, personal bankruptcies. And so, having true business credit separate from you protects you, right?
Right.
And it gives you access to the money that you need to be opportunistic and seize an opportunity to maybe acquire a competitor or move into another market or start another line, perhaps build or buy the business location that you're operating out of, right?
Yeah.
It allows you to scale. I mean, you need money to really, really scale. Or as we've just talked about, Michael, it gives you the ability to survive a storm.
Yes, very much so. Very much so. And so the corporate credit, I love you said corporate credit is not the same as business credit because corporate credit is tied to your EIN number for your business. And when you get that, I put in here, these are my words, you have the opportunity and the access to more funds with less personal risk.
Yes.
That a good summary? Okay.
Yes.
Always scary when I come up with these things going, am I catching what you're throwing at me?
You're a natural, Mike.
Okay.
You're a natural.
But it is, yeah, for the storms of life and storms of business which are coming, you can operate on your cash basis, right? Or you can go tap into little things, but for opportunities to keep people maybe sometimes on the payroll, like you were doing with your consultants, to keep them there so that you have opportunities growth. Because if you do this properly, you are positioning yourself to be opportunistic in a wise sort of way. The money's not there just to go and tap and spend. It's there for great opportunities that you might need buildings, capital, equipment, people for a time period, and you're paying interest and stuff on it, but that the storm is going to pass and you're going to be in a much better position. Is that a good summary?
It's a great summary. Absolutely.
Okay. So when somebody, before they reach out to start even having conversations with you, right? What does their life look like? What are the walls they're hitting maybe, or what are they struggling with to go, oh, if I could just get that fixed, and then they find out about you to go, oh, I've never heard about this. What's going on in their heart as they reach out to you and you have those first conversations? What are the challenges they're facing?
Well, it's generally not having access to the money to to do what they need to do for their business. I mean, most
Yeah.
of these small business owners, they know what they want to be able to do. They know what in their mind needs to be done to get their business to the next level or stabilize things. But generally it takes money. So they're already like, man, if I just had this, right? Or you know, they're losing sleep over the fact that things are so tight, So I've heard the term, like, we're like small business melatonin, we're like melatonin for the small business owner, right? It's like, we give them the ability to actually sleep and take a breath a little bit, and have, access to what they need. So it's generally like, they know that if only I had this, then I'd be able to get that, bring that new person on board, or advertise more effectively, or move into this market, right? I mean, it generally takes money. I mean, it always comes down to money. Let's just be very
Yeah.
clear. I mean, I've had a couple of conversations with people that were like, no, my problem's not money. My problem is I don't have the right people. It's like, we'll hire the right people. Well, I can't afford it. Oh, so it is money. I mean,
Well, it is a money
it
thing.
generally comes down to money. So that's it. But when we actually have a deeper conversation with business owners about the benefits of building their business credit profile and getting access to corporate credit unattached to them, and they recognize, wow, you mean I don't have to personally guarantee things? Because they all have relationships, whether it's family or other friends, that have had some pain as a result of the personal guarantees that the banks or the other lenders required them to sign, right? And they're like, wait, there's a way to do this without having to personally guarantee? And the answer is yes. Now, it's a process.
Yes.
You have to know. And look, some lenders, some banks are like, no, we're always going to have to require a personal guarantee. But we have thousands and thousands of different lenders on our platform, and some are willing to underwrite using different criteria. And so, there's always options. There's always options.
Well, and that's good. And the other aspect, there's always options, and the funding is, all right, this is Michael speaking. The funding is probably available for you if you're a business owner. You do have to meet criteria and things. And dare I say, even just walking through the 4 steps is going to make you a better entrepreneur, a better business person, because you're going to understand money and finances in a whole new level.
Absolutely.
Yeah.
No question about it.
And
yeah,
dare I say that it's those types of people that the banks want to lend money to, right? And so instead of hey, I got a new credit card. I went to the mail the other day. I got another credit card in the mail, right? That's not what we're talking about here, folks. This is a process. It's due diligence on the bank side, because they want to make sure they get their money back.
Yeah.
But you're going to be a better business owner, and you're going to be able to make better strategic decisions for your company, and leverage it, grow it, scale it, whatever you're looking to do, because you have access to capital, and at a higher rate, higher volume, maybe a higher level.
The amount. Yep.
The amount, because it's dealing with your company and not you personally. And I can only imagine, and you've probably got stories of business owners you've helped go from business line of credit to corporate line of credit, and their wives or somebody go, oh, my house is safe now, right? I mean, right?
Yes. Yeah. I have great stories. I mean, I should actually start marketing more to the spouses of these small business owners. They're the ones that are losing the sleep more often than anything.
Yes.
I do have some great stories there. Yes. No question.
Because marriage is a big hot button for me, right? And you talk about what collapses many marriages is communication, and communication about money. And you throw that all around business, and, oh, honey, I just leveraged the house again. You did what, right? There's a way around that, not just for marriages, but for business, to be able to. Here's an interesting question. If somebody takes this and they move it from personal business credit to corporate credit, and their business is now stronger, on a better platform, because they have more access to capital, whether they're tapping it or not, could that make that business more valuable in the eyes of a potential buyer?
Absolutely. Thank you for bringing that up. Yes, 100%. I mean, think about it. If your business has access to working capital that's not actually attached to, like, one of the owners, right, that is on the EIN, Absolutely. And a stock sale,
Oh,
that line of credit goes with the business. No, not in an asset sale, but in a stock sale. Yes. So the buyer can immediately continue with their growth plans and execute
right,
upon that. Because so if you have two businesses in the same industry, but one has access to like a corporate line of credit and the other doesn't, let's say the revenues are the same and the same zip code, everything else looks about the same, but one has access to a $500,000 line of credit unattached to an owner. Is that more valuable than the other one that looks the same in other ways? Every day of the week. And also something else that we see a lot, Michael, in family owned businesses, right? Where maybe mom and dad are ready to, move on to the next phase and, enjoy some retirement years and
yeah,
the kids are going to be taking over the operations. That usually doesn't work very well because access to money through the bank relationships are still with mom and dad, because mom and dad are credible and they have credit worthy, and the banks are like, well, they're still going to be on the hook for everything. No, Junior, you're not yet credit worthy or credible, so we still have to encumber mom and dad. That's not a really carefree retirement for mom and dad. And so,
right,
planning ahead, a couple of years, a year or two or more in advance, and actually building your corporate credit profile so that you can untether, yourself from your business. And now mom and dad can ride off into the carefree
right.
sunset, and Junior does have access to the capital that they need to continue running the operation with
Yes.
less risk. It's huge.
That's huge. Yeah. 'Cause you're speaking to the choir now, buddy, because my son's my chief operating officer, and we've got this vision to, transition the business to him over the next decade or so. I've got no interest in leaving yet, but that is part of the plan.
Yeah,
And I've never thought about that aspect of the whole thing.
absolutely. Yeah, no, it's big.
So I will be reaching out to Geoff after this to say, how do I do this? Because I'm sure it's all business lines of credit. I'm sure it is.
Yeah,
Because I've never heard of this corporate thing with you
yeah,
before you got on here, and this is one of the reasons I love doing my podcast. Is I learn my audience. I can just see all the light bulbs going on, and saying, "All right, go." So here's what I'm going to challenge my audience to do is, if this is intriguing to you, I want you to rewind and just go to the beginning and re-listen, because there's been a lot of value and a lot of mind twisting and a lot of pivoting, just like what you did, Geoff, in pivoting your business. I pivoted. You've pivoted some mindset, some thinking to go, this is a thing. Yeah, this is a thing. And it's not an undercover behind the scenes black market thing. No, this is a real thing. And if you've got a real business and you're wanting to have access to real money to build real value, you need somebody like Geoff to guide you through this process. Because dare I say, you probably can't do this yourself. Right?
no. There's just too many things you can do wrong. And frankly, some things have to be done in a specific order. Like a lot of people are like, well, I don't need your help to get, certain credit cards. It's like, well, no, you don't, but you might want to, because if you apply for certain things in the wrong order, it's going to make it harder to get other things.
Yeah.
And so there really is a process. You don't want to cut yourself off or reduce the amount that you will qualify because you did something else, or you created inquiries on your own account, so no one's going to touch you for 90 days or even 6 months. So there are steps that need to be taken and steps that need to be avoided.
Right. Yeah. And those steps, yeah, don't try to figure them out on your own. You don't have the time. You need somebody like Geoff in your corner to say, okay, here's where I'm going. How do I get there? And even though it's a process, dare I say, I think Geoff's going to get you there a lot faster than you or your team are ever going to get there, because you're going to hit brick wall after brick wall going, "Arr." It's worth it. It's worth it because of the value it brings to your business, the access it gives you, and the positioning and the leverage you're going to now have against all of your competitors, because you're going to have access to more money faster, better, and it's a game changer for growing a business, right?
Absolutely.
Wow. Okay. How do people get a hold of you or find out more? Because I know this was kind of new to people, and to go, this is, huh? Where do they go, Geoff?
Well, If they can, they can actually even scan that QR code on the top of my box right there. That'll get you to my site's landing page. You can even run what we call a business success scan, which takes 7 to 10 minutes tops. It'll show you exactly what you look like in the eyes of the business finance world right now, and it'll show you the items of lender compliance that you've met, as indicated with the green check. If you fall short, red X, you can click on the red X and we'll tell you exactly what to do to turn that red X into a green check. So that can be really helpful. Beyond that, email me, gsuval at xbizfunding.com, or go to xbizfunding.com website. Again, that'll bring you to the same place as this QR code. And there's all kinds of great information and videos on my site, but that's probably the best way. And I am typically very, very responsive to emails that come in.
Awesome. Okay, I'm going to grab those. I'm going to have those in the show notes. And Geoff and I met through a client of mine that he worked with. So Geoff is vetted. Geoff has been through my 25-point checklist, right? Before he got on. All that to say, he's not some fly-by-night dude who just got on my podcast. This is legit, and this is really good. If you're a business owner, you need to seriously think about this and consider it. And I love the legacy transfer of business to the next generation or to a new owner, the value that brings and the ability to, dare I say, at that moment of retirement, to seriously walk away without any further encumbrance. Any of those scenarios, Geoff's going to be able to help you with. So go to his website. It's xbizfunding.com. And definitely take that business scan thing. It's like an MRI for your business around financing. That's kind of cool.
Yeah.
So do that. I'm going to grab all that. I'm going to put it in the show notes so that as our listeners are there scratching their head going, this is really intriguing, they know how to get a hold of you, because I think it's phenomenal. So Geoff, man, thanks for being on my podcast, but thanks for doing what you do. This is really intriguing. You've opened up some things in my brain to go, we need to do things a little differently in the future. So I appreciate
Michael, it's my great pleasure. And coming from the credibility coach, it means an awful lot to me. So thank you so much. It's been great.
Oh, you're welcome, buddy. Thanks for listening to Experts Speak. Tune in again next week for another phenomenal episode. Take care and God bless.